Good afternoon, hedge fund investors. My name is Lawrence, and today I'm joined by Michelle, AL, and Mckenzie to present our investment thesis along with buy and sell recommendations. Our investment thesis posits that the outbreak of World War III in 2025 will lead to global geopolitical instability, disrupting consumer behavior. While this conflict is expected to decrease demand for discretionary goods and increase volatility in essential products, it will also create a short-term surge in refugees, benefiting the travel and hospitality industry. We recommend buying Airbnb, currently trading 136.45 with an estimated upside potential of 56.33, projecting a future price around 213.31 as travel resumes and demand for temporary housing rises due to influx of refugees. Airbnb is well positioned to capitalize on this trend. Conversely, we recommend selling Vinamilk, anticipating a decline from 67,400 to approximately 29,680 Vietnamese dong, reflecting a downside potential of 55.96%. The geopolitical crisis will disrupt agricultural supply chains, leading to rising input costs and logistical challenges that will negatively impact profitability. Next, I'll hand it over to Michelle for the macroeconomic analysis. Thank you.
In a potential World War III scenario, Airbnb could benefit from increased demand for short-term housing due to large-scale refugee movement, with 117 million people displaced in 2023 and numbers rising in 2024 and 2025. Government might partner with Airbnb to provide accommodations for refugees, especially in Europe and the Middle East, benefiting the platform despite economic downturn. Vinamilk, Vietnam's leading dairy producer, heavily relies on global trade routes for sourcing raw materials, packaging, distribution, and exports. About 63% of its dairy ingredients, such as powdered milk, are imported from countries like New Zealand, the US, and Australia. Disruptions, especially during crises like World War III, could cause delays, shortages, and rising transportation costs due to global trade instability and inflation. Our next member is Mckenzie.
Here at our partnership, we believe Airbnb will be a strong buy. This is due to the increase in demand from the displacement of refugees and migrant movements will surge due to the conflict, creating a rise in demand for the need of short-term accommodation. Now, Airbnb's strong, resilient, and efficient business model runs by connecting hosts and guests through one centralized app. This allows the company to maintain pretty low capital expenditures, which is the reason behind their 46.1% profit margins. Now, the growth opportunity exists by the increase in demand needed, which will drive extra revenue to the business. Now, these extra revenues will directly go down to the company's bottom line of free cash flow because they can maintain relatively low capital expenditures, therefore increasing their profit margins. Now, the current share price of $136 has not yet priced in this potential opportunity. So we believe that this is a strong buy for the market that is not seen yet. I will now pass you over to my next partner, Al.
The most important thing about Vinamilk is about the sales growth rate. Due to the war damaging the economy as a whole, it will decrease by a large amount in the first few years and then recover in the end of the period, of the 10-year period. Its price will decrease from 64,000 VND to only 29,000 VND according to the valuation. Looking at the free cash flow and its components, the most important factor is, of course, the net income, which will decrease by a large amount in the first few years. Also, the capex will stay relatively the same with a small sustainable growth rate because the company will need to spend a good amount on capital expenditure to maintain the business during the war. The WACC of 8% earlier was only to get a rough estimate of the price, but we still need to do a sensitivity analysis to comprise all the scenarios. So as the WACC increase, the price will decrease as the risk to investor increase, and they will demand a lower price for stock. And as the growth rate increase, the demand for the stock will increase, and the growth rate will lead to a higher stock price for the share.